Was that an invite then, is he? Or?
Welcome everybody to the Saturday morning backtesting session. We're just going to go through some trades that were available this week. And sorry, Stitch, did I just cut you off? Did you say something?
No, sorry, carry on.
Okay. All right, so I'm going to go through the supply and demand and the market structure bit pretty quickly, just because most of you guys are pretty familiar with that. Let me just make sure I've gone to the right week. Okay, so I've got to go back a week. Beautiful. So we all know that that's the demand that we've been trading out of. We got this as the supply. On the daily, as of last week, we had this body close above. So we had this bullish boss. And then we had the low. Really need to make a new template, which is daily plus 4 hour, because these are the same levels and this happens all the time. Daily high. And we go to the 4 hour. How's everyone's week been? Liam, I see you've been killing it on the charts. How have you been going this week, Stitch?
Yeah, to be honest, I've not had a great deal of chart time this week, but I've been trying to keep an eye out on the Discord for the posts and from the guys. And yeah, it looks like they've caught quite a few nice trades as they were actually happening as well, not just on backtesting, which is good.
Correct. I'm actually about to organize the backtesting session like you and I did, Stitch, for OneSat, Raphael, and all of his were actually taken live. So it'll be really interesting to see as well. No backtested ones.
Yeah, nice.
That's crazy. I don't know how he has so much time on the charts for that.
Yeah.
Yeah, I think that was myself, Raphael and David got one live last night that we're all in.
Oh, you guys took that one live?
Yeah, well, I'm not on a live account for me, but you know, I had my setup on TradingView and it got tapped in and watched it.
Yeah,
I think it was an hour trade, just over an hour. But
yeah, the David and Raphael, I'm pretty sure they both have live accounts. I think Raphael's doing another challenge or something at the moment. So
yeah, I was talking to him about it. I sort of said I'm not going to do any of that until I've tested the strategy over at least 100 trades.
That was what he was supposed to do too. But yeah, anyway, I'll leave that to a private discussion. Do you guys want to jump on and mark some POIs, or do you want me to just do them?
I really can do. Just try and get this annotate going.
Mm-hmm. And Mika, welcome. I know you've only just joined yesterday, but I do know also that you have some you have some history with this. So if you want to jump on and mark any of the POIs as well, like the guys are doing, feel free to.
How can I do it?
Yeah, so if you hover over the top of the Zoom thing, there should be a button that says View Options.
Yeah. Gotcha.
And then there's something that says Annotate.
Request. Okay, I have to.
Not remote control of my screen. You just need to click Annotate.
I don't have that.
Guys, do you know what it looks like on your side? Just because it looks a bit different for me.
Hang on, I'll get out.
Yeah, you just go to the top and it says View Options. You click the down arrow. Click the down arrow there, and then you should see Annotate.
I'll have like origin size and fit to window. I don't know.
It says so under request remote control. It says annotate. Does that?
Yeah. Request remote control.
No, not that one.
Should be underneath it.
Only that one.
Oh, that's weird.
Yeah.
Are you on the Zoom app or on the website?
No. Oh, browser. I use a browser.
Okay. I think from next time, if you can download the app and have it on your computer, I think it works a little bit better with that. Are you guys on the app or the website, Stitch and Liam?
Yeah, on my computer.
Yeah.
On the desktop, yeah.
Yeah, I think it's just a little bit better that way.
Maybe. Yeah, maybe.
All right, I'm going to clear your drawings. Beautiful. All right, you guys happy with that?
Yep.
We have the very, very small unmitigated portion of the extreme, which was swept.
So did you trade this week, Izzy?
No, I haven't taken a single trade this week either.
You've just been marking assignments and
Yeah, I've been spending too much time working on the business rather than actually trading, but like I know it's all coming to fruition now, like in terms of the new members coming on board and everything, but there's still more content I'm working on as well. And I've been starting working on the self-mastery course and on social media stuff, and just to make the processes a little bit better. Because I know like investing in that now is going to reap rewards later, rather than me trying to trade all the time and then have to go back and work on the business. I'd rather just have everything set up, and then when I'm actually trading, I'm just trading.
yeah, for sure. I suppose the downside to that would be that if you did get like an extra 50 or 100 members, that's a heck of a lot of one-on-ones.
Yeah, I know. I've been too generous with how many of those I'm giving, but prices will be going up soon as well after the first 50. And I think we're at 39 or so now. Yeah. So after we get the next 10 or 11, prices will be going up, and then it'll be a little bit more worthwhile as well. But yeah, I do need to reconsider, especially after you and I did our back testing one and that went for 2 hours. I was like, damn, like how much one-on-one time am I going to be doing? But no, it's cool because I thoroughly enjoyed it, and I want to see you guys succeed. It's not just time and money and everything else. If it helps you guys be successful traders, then it's worth it.
Yeah, appreciate it.
So this one,
I know here the low was there, and then we had the high here.
Yeah.
Then we had that one body closed.
Okay, where's the body closed? It's just a wick.
No, here.
Oh yeah.
I'm talking. So we had the one body closed, and then we had a pullback at 22 plus. So I know some people did, some people didn't, but I moved my low here.
You moved your low to that one. Yeah, sorry, I was supposed to get back to you guys on that. I haven't had a chance to. I want to do some thorough testing on that. For now, let's not move the 15-minute low at all, right? Let's just keep it here regardless of how many pullbacks. As long as it's only one body break, we just need one more below this line. So at this point here, let's not move it for now. I will get back to you on that, I promise. I just need to do a bit more back testing on it, and I want to make sure that it's 100% accurate. Well, it's never going to be 100% accurate, but that it works more often than it doesn't.
So even after all this time passes, you still only need one more now?
Yeah, correct.
Okay.
All right, so this was the high, this was the boss, this was the low. All right, let's get some more POIs on the screen, please. Is it all right if I make it a little bit bigger? I just want to make sure it doesn't zoom out too much for you guys. Is that all right?
Yeah, that's good.
It's okay. It's okay.
Okay. Let's get some POIs drawn on, please.
Yeah.
Perfect. Raphael's joining the Zoom now as well.
Hi, guys.
Hello, hello.
I won't be able to participate in the drawings because I'm on my phone right now.
Okay.
So this is today's pricing, right?
This is Monday.
Oh, okay.
We started from the beginning of the week, and we're just going to go through some valid trades, which you probably took all of them anyway.
And live as
I don't know
well.
if you're making fun of me right now.
No, I'm not. I'm not. Right,
Yeah,
cool.
I might have taken them all, except Asia, maybe.
Yeah. Yeah, so this here would be a demand still because it did set a higher high, but it obviously doesn't have any correlating supply zone. No, this must have been a news candle. I'll still draw it just to be aware. Yeah, Mika, you got it. All right, so instead of doing the line, you can change it to a rectangle tool.
Yeah, I got it.
Yeah, so then you can click the rectangle and then you can annotate after that. Okay. All right, beautiful. So here's our zone. 15-minute has turned bearish. 4-hour is bullish, but we're still in premium, very high up in premium of the 4-hour. So what's our objective of order flow at the moment? What are we expecting order flow to do? What's our higher time frame narrative in this sense?
Get back
Someone
to
else.
premium and sell off.
So we're inside premium 15-minute. Yep. To take a sell to do what?
15 low.
yet, but what's the overall objective? Yeah, so Richard's identifying this point. What's important about this zone?
Just the extreme.
No, it's not so much the extreme. It's the first demand zone in discount of the 4-hour leg, right? So the 4-hour has turned bullish. We're now expecting a bearish response from that to take us back into discount in the 4-hour, to then wait for a 15-minute shift in order flow. Let me just say, this here was the 4-hour, gone up. We want it to come back down into discount of this 4-hour range, and then to see 15-minute order flow change to bullish to potentially continue that leg, right? Because structure holds until it doesn't. So our idea here is that the 4-hour should continue to set a new higher high. I know we've tapped into a weekly supply, so we need to keep that in the back of our mind. But as day traders, we're not really worried about what the weekly is doing. But just to keep that in the back of our mind, that now that we have tapped into this weekly, we could see further rejections to the low and potentially take out the current 4-hour and daily low. But we don't know that, right? We're just executing with the information given to us in front of us. So right now, the expectation is, yes, we've gone back into premium of the 15-minute leg. We'd be looking to take shorts to take us into discount of the 15-minute leg to hopefully take out the 15-minute low and to tap into this 4-hour demand below to then take continuation longs to take out the 4-hour high. Cool.
Cool. Sound good.
All right. So in this sense here, we haven't tapped into this actual supply, but we have tapped into this. And if we look at this, right? So this is just an interaction zone because it didn't set a higher high. But here, this is a demand zone, right? And an easy way to mark out your demand zone, guys, is when you see something like this and we see a pullback, and it does not need to be 22 pips. I think a lot of people get that confused. Not so much the people in the recording now, but just, sorry, not in the live Zoom, but when you're watching back the recording, because I've had a few questions about this, whether the pullback needs to be 22 pips for a demand zone. It doesn't. The 22 pips is only for actual structure. But to identify if this is a demand zone, we can see here that there's a bearish pullback. So at least 2 candles would be nice. And then that high has been taken. So this was the high, this was the higher low, this was the higher high. Therefore, this is the demand zone. This here is an interaction zone. So it satisfies the interaction component of a POI. And then we have this supply created off the back of it. So I haven't actually looked at this, but let's see if there is actually a trade within here. I'm not too sure there is, but let's have a look. So once we've tapped into this, what have we got? So we have this as inducement. Okay. And when we tap into here, can someone identify where currently we'd need to see fail to have a change of character?
I think here.
Yep. Where's the candle trading lower? So that's an inside bar, right? So this is only one candle. It's not trading lower. It's just an inside bar. This one didn't trade lower. This one, okay, yeah, sorry, missed that one. That one did trade lower. Body close, yeah. Now, if we look at this, once we have this, we can mark out our demand as this guy here. We have these very, very minor buy to sell wicks, but given how small these candles are, let's just see if this would be, if we could cover the high with a relevant, no, it's too big of a stop loss. Okay, so what we could take is the inside bar, which should be able to also cover the extreme. We want 0.3 higher than this, and the high here is 144, so we want 147. Beautiful. Yep. Like I said, I haven't looked at this, but let's just have a look. It looks like we'd be tapped in. What time of day is this? 7 a.m.
Where are we on the 15-minute again?
Premium in a supply zone.
Okay, yeah. Oh yeah, no, this, I remember this trade, I missed it.
Oh, okay. Okay, so as I've always said, let's look for places for reaction. Here we have this.
So that V-shaped reaction wouldn't bother you in that instance.
Which V-shaped reaction?
Well, this kind of non-existent one at the top here.
Yeah, the fact that it's not a V-shaped reaction, you mean?
Yeah.
Yeah, but again, that's discretion, right? So that's not one of the rules. All the rules here have been ticked. We're correctly situated in terms of structure. Okay. What was 15-minute order flow? I think it might have actually been bullish.
I think it was still bearish.
Still bearish.
Oh yeah, because we never, yeah. So bearish order flow in extreme of 15-minute. Sorry, not in extreme, in premium. That's always a good time to sell.
Do you reckon you could explain why you wouldn't have a bullish chalk up in that leg? Because I know John was asking about it the other day.
Because
because I was trying to explain it to him, and I pretty much did, but I reckon he would benefit off if you explained it as well.
Yeah, of course. So we first need to identify the lowest point. Okay, so this here is the lowest point. To have a bullish chalk, we need to see a push up, and then that low be taken, and then the high be taken, and then like this, right? So even within this range here, and I think someone put a question, I'm not 100% sure if it was a DM or on the channel and the questions chart. Oh no, it was in the questions. And thank you very much, Stitch, for answering that, right? With identifying where the chalk is in here, a lot of people would say from here. Okay. But that's not correct in this sense, because there's been multiple pullbacks within this leg. If this was just one push up and then a push down, yes, this would be where we'd need to see fail. But in this sense, it's actually because we only need one candle trading higher. So we have this candle here trading higher than this one, right? So this is where I would be marking the chalk. Highest point. So here we've set a higher low, we've set a higher high, then we've set a lower low. So we want to see that last lower high be taken out. So by breaking above here, this is the first time we'd have a bullish chalk. And although we're having a bullish correction here, because this was one bearish candle and we haven't set a lower low, then a lower high, then another lower low, we'd have to wait for the last lower high to fail. And this is the last lower high. All of this stuff is internal and irrelevant.
Yeah. Cool. Yeah, that's what I was explaining.
Yeah.
Because I think some people would.
It's frustrating too, right? Because you see all of this and you're like,
yeah.
God, like all this time and we still haven't turned bullish, but we just follow the rules.
Because you could say like low taken there, high taken there.
Yeah.
And then the chalk up. But because that's just internal, doesn't mean anything. Like
exactly.
The best way I try to explain is like we're trading between like this supply zone and like the demand. And you got to wait till one of them fail to get either chop or continue like the bearish.
Yeah. If we look at it this way, right, it's the exact same way how we mark out our breaks of structure, right? Because we could have within here a 22 pip pullback and then a break below this low. But if this wasn't the 15-minute low, that's irrelevant. We want to see those actual significant zones fail. So within here, a lot of people previously, like I know Stitch with Photon and stuff, you guys used to have like internal boss there. And then below here, another internal boss. And then above here, another internal boss. And in that sense, that's how you guys would have a chalk in here. But that's very low probability. It's not a very significant level at all.
Yeah. And the best way I tried to explain, I don't know if it sounds dumb, but like if this time frame was like a 1 minute, and we pushed down and we were looking for the chalk up here for an entry, we wouldn't be like saying, oh, there's a chalk here, I'm going to enter up here. Just look at it as if it's a massive 1 minute chart and you're still waiting for the highest point to get taken. Yeah,
exactly. Because price is fractal, right? It's the same in every time frame. I'm just going to put my desk up. All right, cool. Is everyone happy with that? Should we proceed?
Yep.
Let's have a look at this works out. So we got, where's 4R? Yeah. We tapped it.
So would you take it? Would you take a trade here even though age is not open?
No, I would not.
What did you say?
Because the Asian session wouldn't be open yet, I wouldn't take a trade here.
Okay.
Because this is
this is Asian for you. This is Asia for you.
It's not even Asia yet. It's just the dead hours between New York and Asia.
Okay.
The banks in Australia would open at 9, so in half an hour from here.
Okay.
But again, the the Sydney banks are not very high volume, surprisingly for AU as much as Asia is. So the Japan banks, the Tokyo banks, sorry. All right, so there's 4R there. So where's our next target? So remember, we're in premium of 15-minute, and 15-minute is bearish. Yep. So we've got this demand below. What we can do with it is have a look on the 1 minute and refine it. What I'm also seeing here is this zone swept liquidity, right? Then we also have this unmitigated portion of this wick, correct? All right. So we could take 25% of the wick, or we'll drop down to the 1 minute and actually refine this zone as well.
When you say that this zone took liquidity, what I understand is that price will probably not go right away below it. Is
Correct.
that what you understand too? Yeah.
Yeah.
Okay.
So that's why I would want to close my position here rather than holding it here or something, because this
Yeah,
zone
okay.
is swept liquidity, it's going to be more protected. So what we could
Okay.
potentially see occur is that price could come into this zone and then at least push back up to a supply here, at which point we won't know whether we're going to set a lower low or a higher high. So just to not have that pullback occur, let's have a smaller, more conservative target, and it's still 7R. Like that's still a very, very nice amount of VAR.
Yes.
So if we have a look at the 1 minute, we've taken our 25% partial off at 4R, so we're risk-free. We know that we can expect a reaction from here. This zone has also swept liquidity. Okay, so that's something to keep in mind. We could potentially just be targeting 25% of this zone, but the flowchart says the next 15-minute demand, right? And I don't think this is a 15-minute demand. This one is. So if we look at this here would be 6R. If you wanted to be a bit more conservative, yeah, 100%, you can close the remainder of your position here. If you want to hold it all the way to the end, I definitely would not suggest holding it to the actual bottom. I would probably take 25% of this zone. So that's what I would do here.
Actually, the 6R is a demand zone. And the one you're targeting is the wick below the demand zone.
Oh, beautiful. And okay. Yeah, no, that's correct. And it's also unmitigated. So we should just be taking it off there. Thank you, Raphael. So let's actually see the difference in reaction when we come to this point as opposed to here. And with this, rather than it just being the unmitigated portion of the wick, what I did was I took 25% off here, which is the whole pivot, sell to buy. Okay, so this is that pivot demand creation.
And in the zone that represents the wick, I would have taken actually only the lowest wick actually, because there's a fair value gap below. Yeah, this portion.
Yeah.
And the below the zone below, there's a fair value gap, so it would actually go through the fair value gap and go straight to the bottom.
I'm sure you know that we don't usually use like imbalance as much in this course. If that's something that you've tested and you want to add to your trading strategy, by all means. But I understand that you've got this fair value gap here and all that kind of sense. But
oh no, I'm talking about the fair value gap below it. I'm not talking about
from
that.
here to here.
This portion. Yeah.
Okay. Yeah. Again, right. So
if it was to touch this, it would go below it actually. Yeah. But okay.
But also let's have a look at the difference in R as well. So when we get a little bit greedy like that and potentially have a pullback, it's not really worth it. So say, for example, here is 6.16. If you had the imbalance, which is there, 6.8, and it's only 75% of that too. So that's 0.6 times 0.75. You know, it's
not worth it.
Yeah. So if we have a look at this, so here's where we're expecting a reaction, and then here's where our TP would be. So we got a reaction and we hit TP, and then let's see, fair value gap gets filled. And
there's more imbalance on the 15 minute.
Oh, wow. Okay. Yeah, there's heaps of imbalance on the 15 minute too. And yeah, this is when the bank opened, 9 a.m. Beautiful. So that's a very nice trade. I didn't actually see this in the back testing or live or anything. So that's a good one there to mark up. There was another one when we come down into this demand. So now we go back up to the 15 minute. Right,
may I ask a question?
Of course.
Is it worth for us to mark these kind of trades, even though nobody will be taking them because they're not in the zone, in the session?
it's
Asia
good just
or
to,
whatever.
yeah, I understand. It's good to be able to mark up the actual
Spot
entry
them.
model and to go through in terms of like the theory as to why I would be entering there, just to help with the psychology of being able to spot them a bit more live. But I understand what you're saying, especially what I was saying to the guys before you jumped on actually is I'm really excited to go through the one-on-one backtesting with yourself because you actually took all of those live. So it'll be good to see how they are live as opposed to just backtested or forward tested. But I think in terms of data collection, you can't go wrong with it. In terms of whether you're actually going to be saying, oh, this is what I could have made this week, maybe not, because this is not a time you would be trading. But the other thing is, because we have people from so many different countries, and it's not so much that you can't trade before Asia opens. It's I'm strict with my rules because A, I don't want to be spending 10 hours a day on the charts, and B, I want to just be trading when there's high volume. So if I'm wrong quickly. And if I'm right quickly. But it doesn't mean you can't trade outside of those hours. So the other reason why we're going through all this is because at this time in another country with one of our members, it might be a time that they want to be at the charts trading. So I also just want to show the amount of opportunity that's available at all times.
Sure.
So it's more you're backtesting for your strategy, not really to make money.
Yeah. It'd be pretty cool if you can make money backtesting. We'll all be millionaires. All right, so 15-minute, right? Because we're not trading anymore on the 1 minute. This is closed and we can't trade unless we've got a 15-minute zone. This one here, are we interested in it at all?
No.
Why?
There's no interaction with that one.
Beautiful, thank you. This one here we can, because we have here this as a supplier because it did set a lower low. All right, just lower than this one.
Then wouldn't you take that demand?
Which demand? This one?
Yeah.
Did the body close above before? No, it didn't. So we could actually take this week. Good spotting. You can take the top of this week to the bottom of this week. Would it be a good time to be taking longs at this moment? From here?
Not since we tapped into weekly and we're bearish.
Perfect. Well done.
Plus, that candle's like a news candle. Do you usually trade anything off that?
This one?
Yeah.
Would I usually trade what, sorry?
What zones off that news candle?
Which zones do you mean, like up here?
Like
or down here?
Down here, like after, because usually after the news, we get like that pullback that sort of corrects price again. Do you usually trade off them?
After this whole, like this is probably what, a whole day more? 8 hours, okay. I don't have a definitive answer for you on that.
Because we were bullish on the 15-minute, and then we had this news candle that pushed down.
Yeah.
Do you ever think that because of the news, we're not really bearish on the 15-minute?
No, because the news will change it more than just in that spike, right? Because it will actually change the fundamentals of price. So say, for example, this was CPI. The amount that it dropped like this, it could be that the expected was the actual was a lot lower than the expected. But even if it's lower, that means ongoing AU is going to be lower because the inflation rate or whatever caused this is actually that price. So what we find is news and structure 90-something% of the time will align. Okay. Because it means that the outcome of the news will continue to push the price. It's not so much like manipulation and all that kind of stuff that you see on Instagram that, you know, like the news just comes to spike and turn around and bullshit. Like if it's an actual interest rate decision, it's going to influence the cost of borrowing AUD, right? So therefore it will have an effect on AUD USD. So it's not just temporarily for when the news is announced, it's going to have a lasting effect. And the other thing to keep in mind is we haven't yet come back into discount of the 4-hour. So we should still have the overall high time frame narrative that shorts are in play. There was nothing in any of this. And then we sweep. Yeah, so we swept the high. And at this point, sorry, it's not a sweep. Once we have this first body close, and I think this was occurring the other day with yourself, Liam, and Murph, and we said we'll wait for the whole next 15-minute candle to close to see if it was just a sweep or if we're going to have the second body close above.
Yeah.
So I wouldn't be taking any trades. And then this closed above.
Actually, I have a question just there. I saw what you wrote. I think it was yesterday, but I don't know if it applies there. The high like that, the flow chart, I think, requires that we go bearish on the order flow on the 15-minute. But you said you don't need to wait for the order flow when you are at the extreme. But was it because the order flow or the structure was already bearish? You said that?
Correct. Yeah.
In a case like that, I mean, if you were in a case like that.
Yeah. So what I meant by that is,
I hope it doesn't bother anybody if I ask questions.
no,
I mean,
I'm sure there's other people that are
place.
thinking the same thing as well. So say here we had a 15-minute bearish boss.
Yeah.
Okay. And then on the way back up, we've turned bullish in terms of order flow. We're still bearish in terms of structure. Oh, let me draw that up again. So we've come down, had a 15-minute boss. Say we did this, and now we're bullish in terms of order flow. And we've come up here, and up here is an extreme supply.
Yeah.
If this is an extreme supply and 15-minute structure is bearish, we only need a 1-minute bearish chock here. We don't need to wait for a 15-minute chock here.
Okay, so, because of the structure.
Yeah, because of structure. So, and if it was a bullish chock and we were in demand, we wouldn't need to wait for a 15-minute chock up. We could just have a 1-minute chock up.
Okay. Very good. Thank you.
So I also think what you're referring to, Raphael, is we're also, also more bullish, and we're also in the discount and premium of 15-minute and 4-hour. So that's why we didn't need to wait for the order flow shift. Bullish.
Yeah, I get it. Thanks.
No worries.
Cool.
And so here we have a new 15-minute boss. Okay. And what's the rule here, guys? When are we going to start looking for trades?
22 pips.
Perfect. All right. So what I actually did the other day when this happened is I just took the high here and I measured 22 pips down. And I'll show you. I just had an alert that said 15-minute low set because it was the other way around, right? So just set this, find where 22 pips is, set an alert that says 15-minute high set. And until that alert goes off, you're not interested, right? And have an alert above as well, because if it goes higher, then the 22 pip pullback will start from a different point.
Yeah.
So we'll just wait till we have a 22 pip pullback. We can identify where the 15-minute bearish chock would be. All right, but we're not interested in it until we have a secure 15-minute high. Perfect. Okay. And yes, Raphael, sorry, I did see your message. I did not move the 15-minute low line yesterday on the outlook, so thank you for spotting that. So after we have...
It's all right. I mean, it happens a lot. I mean, it happens to everybody.
Yeah.
No worries.
So this one here is still the right 15-minute low in this sense. So here, we're here to here, and we're bullish.
Also with, sorry, going back to the, you know how we're talking about leaving the low if we have one body close.
Yeah.
So because I moved mine just to test, so my high was here after we had the close here because I moved my low. So then when I had the extreme, because this is where I took a loss, the extreme up here.
You took a sell there.
Even though the body closed, that was my fault because I didn't realize in the 15-minute
Closed above.
Yeah. So it was a stupid trade for me, but it sort of, you know, confirms that
we shouldn't be moving it. Correct. Yeah. Because it comes back to that whole internal thing as well, like we were just talking about with the chocks. That's why I don't think we should be moving the highs and lows after that one body close. I think I did it a few times and it worked out in my favor, and I probably had a bit of bias towards it, but I want to do a bit more testing on it.
Yeah.
All right. So now that we have this new 15-minute leg, can we identify some POIs within this leg, please? Yep. And that one swept liquidity as well. Beautiful. You guys are becoming experts at this. Was there any that just accidentally got wiped? Yeah. Cool. Yeah. Okay, we have these buy to sell wicks. Did they interact with anything? No. You got the extreme supply. Yeah. Awesome. All right. So what are we thinking here now that this has occurred? What's going on in our minds? What are we thinking to frame up a trade idea? What would we be looking for?
To take
the
short.
take short when the price pulling back here.
Yeah, we could take a short from there. So there's a nice supply there. We've had a 15-minute bearish chalk in the extreme of the 15-minute premium. So we want 15 minutes to go into the discount. It's bullish. So the idea would be, yes, we could either come back to here and then continue on to a place and discount, maybe this guy or this one, to then turn bullish again in terms of order flow and take out the 15-minute high. Okay.
Yes.
I think I had a trade here on Monday. Where was it? Oh, it's a bit further down. Okay. So there wasn't anything within here that actually matched the rules. Yeah, then we just blew straight through that guy.
So this time of day would be what, London?
London opens here. So this was
Okay.
Frankfurt. Yeah, and then London opened there.
Okay, thanks.
There weren't any trades there. And then we came into a shorter or long? Long after we tapped into the demand below.
Yeah.
Okay. So once we've tapped into there, we go straight to the 1 minute. Okay. We have inducement, which was swept. And can someone mark up where the chalk would be, please, Raphael?
I
Oh,
can't actually.
you can't.
But,
sorry, yeah, that's right. Now someone else can
yeah,
jump on.
It would be. Yeah, it would be right there.
Cool.
Sorry.
That's all right.
I'm getting okay with the chalks right now. I mean, I have to. I'm
Perfect.
practicing.
Yeah.
Everybody's correcting me, so I'm learning.
So Raphael, I also saw that you said that you'd have like a internal and an external one. I would try to avoid using that language. Maybe just use major or minor, just so you don't.
I said minor. Yeah, I use major
sorry.
now. Yeah.
Okay,
yeah,
perfect. So where would you have your major chalk in this price action?
Right, actually at the inside bar, just right there.
Here?
No, yeah, this one. Yeah, but I mean the candle before it, but yeah.
Yeah. So you could have this, but if you really wanted to use the whole major one, it would be from here to here, right?
Okay.
Like from this low, taking here, and this being the high. But yeah, this one here is also very good. Okay, just to keep in mind. All right, so once we've had this, we've had a liquidation model where in terms of structure, 4 hour is bullish. We don't think we're in premium yet. We are in terms of when we tap here, we're in discount, sorry. Oh no, is that the 15-minute? So here, yeah, we've just tapped into discount on the 4 hour. So this, if we're basing our trade idea off of this demand zone and this demand zone is in discount, then that's a yes when we're saying, are you in discount? Even if price goes a little bit higher here. Okay. It's based off the zone we're looking to enter off of. Is the zone in discount? Yes or no?
Yeah.
Cool.
Yes.
So this one here is in discount of 4 hour. It's also in discount of 15-minute. Both time frames are bullish. So this is all guns blazing, right? We should be taking longs. Where's our order flow on the 15-minute?
Bearish.
Yeah. So it turns bearish up here and it hasn't turned bullish ever since.
Yeah, only 2 stars. Stars trade this week.
Yeah. And the first trade here, the first entry, we can't actually take it because it doesn't satisfy 5R. So I'll show you if we were looking to take the extreme. And if we were looking at this and saying that this was a supply zone and that we have these as buy to sell wicks. because order flow is bearish, we should only be targeting the next supply, which is here. And I believe when I was looking at this, it didn't give us, oh, this one doesn't give us 5R.
Actually, you're using the buy to sell weeks, even though they didn't sweep liquidity. I mean, if there is inducement afterwards, I understand it, but you take them by default, you set a zone there, even though there's no sweep.
Yes, if there's 3 bullets for the day. So
Okay.
if 3 bullets, you can take the flip every time. That's up to that's what I do, because I only trade 1 session and I know I'm not going to get more than 3 opportunities to enter the one setup. Not that I know that, it's very unlikely that I'm going to get more than 3 opportunities. So I'm happy to risk 1 on a flip, even if it hasn't. If I've only got 2 bullets left, I won't take the flip if it hasn't swept liquidity. If I've only got 1 bullet left, I just don't look at the flip at all.
Okay, thanks.
No worries. So this one actually did give us 5R. I'm not too sure what I was looking at when I looked at it, unless I was looking
No,
at
I don't think that's the correct 15 supply there.
Ah, okay, yeah, that would make more sense.
I think we come down a bit lower.
Yeah. That means there should even be more on. This was the demand.
Well, when you said 25% of the supply above, actually, you said you refine it to the 1 minute zone.
Yeah.
Of
So
supply, so it might be more.
Yeah, we can definitely refine. We can take this guy as the refinement, and we can take the extreme. Cool.
Yeah, inducement above the flip is really nice.
Yeah. One second. Frame this up differently. Oh, so this was where I took the first one. How did I enter from here when we weren't in a supply, unless in a demand? Sorry. Give me a sec. Oh, because these buy to sell wicks. But they didn't interact with anything. Disregard that first entry. I don't know what I was basing that one off. Came in, we have this, but this didn't tap into the 15-minute supply. Sorry, 15-minute demand. Yeah. And this one was less than 5R. So that's the one I was talking about, but it was incorrect. So then after we swept this, then I was looking for this chalk. No.
So Izzy.
Yep.
After we've had like this sort of inducement here, would you play an entry of those buy to sell wicks here?
The flip? Yeah, you can.
Would there be enough room to move your entry up?
To cover entry up?
Yeah, so like, so you could cover the low by
cover the low.
No, the low of the buy to sell wick, and then would you move your entry up a bit?
Yeah, you can. So you could probably actually be already tagged in there, but it doesn't really make sense to play it like that, right? So if it was a couple of bips, which is like 0.1 pips away, then yeah, but like to move it that far above the zone you're expecting, that should either not tap there and continue going higher, or it's just going to go through it and you're going to be a drawdown. So like if I'm looking to enter here, sorry, yeah, go ahead.
No, go ahead, sorry.
Yeah, if I was looking to enter here and 2.5 pips, say for example, I know this is 1.5, but say it was there and it was a lot lower, then yeah, I could move it up like that. But I don't want to be pushing it all the way up, because it doesn't really make sense to say I'm basing a trade idea off of this POI, but I'm just going to move it 0.5 pip above it. It also just depends on spreads. So maybe because of spread, I would have needed to move it above here. But then again, the candle would need to go lower than because of the spread anyway.
Yeah.
And it's also very discretionary each time to move it just a little above the zone or not, or
that comes down to how you've created your trade plan, because yours should be a little bit different to mine in that sense. I 95% of the time will take a 2.5 pip stop loss and adjust it to covers 0.3 of the low that I'm looking at. So this here is the low of this week, which is 950. So I'd be looking at 947, which is there. And then this is only 1.5 pips. So I could potentially move it up. But in this case, I'd probably play a 2 pip stop. I would do it like that. I'd have a little bit above and covering the low.
So if you were going to use 2 bullets here, right?
Yeah.
Because you know that you don't need to cover past your slow here because you'd have another entry at the extreme. Wouldn't you just move the entry up? Because even if you get stopped out, you know that you're going to get into the extreme.
Yeah, I guess you could definitely play it that way. So you could move it all the way up here and then you'd be tagged in earlier.
Yeah.
You could definitely do that. But then it's just depending on the structural point of where you're placing a trade ID off of, being this POI, and then putting it like a pip above that just doesn't sit right with me.
More than often, actually, we are swiped out.
Yeah,
of the
because
trades
if it stops that high
rather than not tagged in.
Exactly, yeah. Because if it stops that high above it, it could just be inducement, then follow the zone later.
Yeah.
So you could still just have the limit there if you don't interact with a 15-minute supply yet. But yeah.
I
Very
haven't
valid
seen
questions.
that many trades where we're not tagged in when we are in the zone. Actually, it
Yeah,
really goes
exactly.
lower in the zone and we
Exactly.
are swiped out.
Yeah.
Yeah.
Cool. So we've got that. And then what I was looking at here is we have this as a supply range. So this is that more significant shock that we were talking about before. So this one here, I don't know what I was judging that one off. So just ignore that. Just a lapse in judgment. And then once we had this candle close above, oh, this was a 15-minute shock, I believe. Nope, 15-minute shock would be all the way up here. Okay, so we have this more significant shock. We've tapped into this 15-minute demand, which is in discount of 15-minute and 4-hour. And then I was following these mitigations. So we have this candle here that swept liquidity that has been mitigated here, and we've broken above. This is not a 15-minute zone, so we don't have to cancel the limit when we've interacted with it. This one is. And then as price came back to this zone, we can leave the limit on this one and see here what I did. I still did the entry and I did 2.5 pips to cover this low, Liam.
Yeah. I took the same trade, but I took this whole like demand range. As soon as I saw like the inducement stop just before.
Yeah. Oh, you took this one?
Yeah.
Yeah, beautiful. This one was really quick too. It was like less than 10 minutes or something. So this was exactly 10 minutes. And this was during New York session. So New York opened half an hour before this trade occurred. And then we'd be targeting. Yeah.
Sorry, Izzy, just quickly there. Are you trying to cover this low as well? Are you trying to
just
cover
because
both
of how
those?
small this POI was, and that I'm happy to use a 2.5 pip, but you don't have to at all, right? You could have played this with a 1.5 if you wanted to, right? And have like a 10-hour trade. But just because I'm happy with the 2.5 and I'm not greedy in terms of my R, realistically, you probably just needed 2 pips. So if you wanted to have a look at the low of this candle, it is 66, so 63. Take it to 63. And then you could take 25% of this POI if you really wanted to. Right. And then you could have a 1.9, or just to have a round number, you could have a 2 pip stop loss, which increases your R. But again, I've just seen it so many times where I've tried to make my stop loss smaller to get more R, and I just completely missed the trade, that I just don't want to have to go through that. I'd rather take a loss than that occur to me, right? So I'm just happy to use 2.5. That's what my trade assistant set to anyway. I just set the stop loss to 2.5 pips. Sometimes I'll have to manually edit it, but you can just set it to that so that I know that this is what I should be targeting, and then just adjust the entry point. Because as well, if our spread is like 0.3, then you have to be entering here, right? So you got to keep that in mind.
So it's not.
May I ask a question?
Yes.
Sorry, go ahead. Richard, go ahead.
Sure, thank you. I was just going to say, so you're not really worried about this line here because this has swept liquidity. Say this was like way below your stop loss. You wouldn't be worried about that. You're literally just worrying about this one that's mitigated that extreme.
Correct. Because this is swept liquidity, it should be protected. We're not expecting price to trade through this.
Yeah. Okay.
So you're not leaving the limits. Sorry.
I was just saying demand's been respected there and it's pushed up.
Exactly. Yeah. Go, Raphael.
Yeah, so that was actually kind of my question because this is like a re-entry or confirmation entry. Yep. And I was wondering what would be the rationale not to leave actually the flip or the extreme below. And is it always like in terms of number of bullets I have left for the day or something like that?
Yeah, so with this here, right, if you've got 3 bullets, there's one here, and one here that you can use. So if this was
Okay.
a stop loss, to be honest with you, I probably wouldn't take this one at all. I'd only have this because this whole low could be swept as well. So I'd want to save one bullet in case the low was swept. And because this flip itself did not sweep liquidity, it has heaps of inducement, but it didn't sweep liquidity. So it can be traded through, especially how close it is between here and 25% of this one, that if this was a loss, I would only have one bullet here. Okay. Especially, I'm pretty sure this was a rather large zone. Not too bad, right? That looks like 0.3 below. So I'd have one there. And then if that was swept, I've got one last bullet to play from the extreme of the new chalk if it occurred.
Okay, so but the major rationale for the trade, the first one you took, is the fact that liquidity was swept in the inducement zone and then partially mitigated, right? That's the main rationale. Okay.
Yes, it's mitigated, and like Liam said, it was respected. It set another higher high. So this one here set a higher high.
Yeah.
And then the following one set another higher high.
I understand. Okay.
Yeah. But then you wouldn't use that rationale and then try to take a long up here, right? So just keep that in mind, just because of how high you'd be and how close you are to the supply. But because here we've got a lot of room to play, then you could take it from here.
But if this is your extreme here, and then you've done that and this, isn't this a demand chain? So if this fails, would you really be looking for a long still here or not?
I think if this was to fail, if this is irrelevant, just disregard this.
No, yeah,
what I was thinking.
Yeah.
So this here would be the demand. And yes, you've got this demand chain, but as Raphael said, I think in the questions one as well, demand chains on the 1 minute aren't really something that you really need to be worried about, more so on the 15. If a demand chain fails on the 1 minute, so be it. Like technically we've already had a demand chain fail here.
Okay.
So
this
like
is always valid if we haven't touched supply.
If we haven't touched this, yes. Yes.
Okay, cool.
On the 1 minute, you're really trading between this swing demand and supply, aren't you? So
yeah, exactly. So
you wait till see one of them sort of fail, and then that's like more of a confirmation.
Yeah, but even if this was to fail, that wouldn't mean I'm not looking for. If this would fail, it means bullish intention. Yeah. So this here would confirm that bullish intention that we've broken this, but really your swing high would still be up.
Yeah. I was just saying the 1 minute sort of.
Yeah, correct.
Could you show me the 15 minutes easy, please?
Yeah, of course.
Okay, thanks. Yeah.
And we've also now had a 15-minute chalk, so we've taken this and we've taken this. Cool. There were quite a few other ones. We don't have heaps of time, and I actually do have to jump off rather quickly. We've got another house inspection. So let's have a quick look at Tuesday and go forward to it. And I'll just quickly run through those ones. Might go out to the Forex. So there was a loss there, and then there was a win afterwards.
Is this on Tuesday? Is it?
Yeah.
Tuesday. I didn't have.
Quickly mark up structure. So this was the 15-minute low, then this 15-minute low broke. Sorry, at the point that we took this, it was still just swept. It wasn't very nice to be taking this long after the sweep, but given that we were in discount of 4 hour and technically still in discount on the 15-minute because we hadn't broken below, it was just after this candle swept, then the next candle closed above, and it looked like it was going bullish again, that when it came back down into this zone, all right, we had this inducement, it was swept. Then our chalk would be here. So here we have this POI, which is really irrelevant. Like yes, we have this supply there technically like that, but I wouldn't be taking a trade off this, especially given that the 15-minute low was swept, and because we've still got this and we've still got the extreme. So if you were to play 2 bullets here, you'd have one here and one here. I wouldn't be playing a bullet off this one. And in this case, we don't get to 4R to be able to take partials. So this one was a loss. But again, I would not have taken this trade because we've already had one candle close below the 15-minute and then a push up. So I would have waited for the 15-minute to confirm whether it was just a sweep and we're going to go higher, or whether the next candle was going to close below and we have a new 15-minute bearish boss, which was the case. So once we had the second candle closing below, this 15-minute low became a 15-minute boss, meaning the high was still the same point, and then we're not taking a trade until the low set. So now we have a 15-minute low, which is here. And then we have a 15-minute bullish boss. Okay, and within this 15-minute bullish boss, we of course have the 15-minute extreme demand. And then we have these buy to sell wicks, which price respected after the close of this has pushed up. Then we have this unmitigated portion of this. So this here is another demand zone, which created a new higher high. So we look to the lowest point. We have this one. This one was mitigated. So if we take this, then we take this next POI. There. Then we've mitigated it here. Because this wick had already come so low into it, I was looking at just the unmitigated portion of the POI. And I was looking to take it to this supply, which are these buy to sell wicks on the 15-minute. Okay, I'm going to get rid of these. This was the loss, just to make it a bit neater. So we're on -1. After taking that first loss, I wouldn't enter at the extreme again because of where we were situated in terms of we'd broken below the 15-minute low. And then here we're looking to see another liquidation model and an entry over here. So once price came on the 15-minute back into this zone, we can go to the 1 minute. Okay, we have this inducement. And then we have a chalk. And in this case here, you can use your last 2 bullets on this guy and on this guy. So again, I took the buy to sell, and then I could see here that we have these buy to sell wicks here as well, but they're so close and so small that I was just going to take this POI, which again, if we look at this and the rationale behind it, price is pushed up, it's pushed down, and then we've had 3 consecutive bullish candles. So this was that last point that supply tried to hold and it failed. It didn't sweep liquidity because we didn't trade lower than anything. So it's not as good of a zone. We still definitely have the extreme, but I wouldn't be playing this. You could have 1 bullet here at the entry, and then this was 2.5 pips to cover a lot lower than it. And then you can have your last bullet at the 25% of this as well. So you could use the unmitigated portion, you could use the whole thing, you could use the demand zone. It's up to you. With 2.5 pips, you're going to be able to cover the low anyway. Cool. And then when price came here, tap the top of that. And then we were risk off. This was a bit of a longer trade, I think. Okay, so 4R was off there, which was 45 minutes. And then in terms
why
of
do you count the time it takes to go to 4R or close the trade? What's the relevance of the information?
Just mentally knowing that you're not going to have to hold a trade for too long, that with the strategy, you're going to be risk off usually within an hour. And then you don't have to, you can look for re-entries and you don't have to keep thinking about it. Like I know personally, because I traded retail support and resistance for so long, how frustrating it is when you're looking at a 4-hour candle and you're holding in a drawdown of whatever it was, and that your trade would eventually hit stop loss after like 8 hours of you holding it. With this strategy, you're either going to have a stop loss within usually a minute or less, or 5, maybe 10, or you're going to be risk off within the hour. And then it's so much nicer psychologically that you can then just leave your charts, have your alerts set at where your TP is, or if you're going to take another 50% partial at 8R, and then you can just walk away. So it's just to show that it doesn't take long for this to work, that within 45 minutes, 44 minutes, we were risk-free and we can go off and do other things with our life. We don't have to be slaves to the chart, because every trader says they want financial freedom and time freedom, and then spends 10 to 12 hours on the charts every day. It's very counterintuitive. So if we look at that, then where would we be targeting? Well, this is not a supply, right? Because it hasn't set. We can, if you want it to be, If you wanted to be very conservative, you could just be targeting this, right? And it's still quite a lot of R. You could take 25% of this zone, but I'm targeting this one here because as well, if we look at this, this is a 5-star trade, right? No, it's a 4-star, 3-star because 15-minute boss bearish, but we're in discount of 4 hour. 4 hour is bullish. 15-minute order flow is bullish. And so we can definitely be taking longs to the next unmitigated supply. Okay.
There's no 3 stars actually on the flow chart. That was one of my questions.
When I said that, yeah, it's a 2-star because 15-minute structure is bearish. But the only
but
the
we
other
don't
idea,
have 3 stars. Couldn't we have three stars?
I think mentally I was like, it's either a really good trade or a trade you shouldn't really take. 3-star to me just didn't really sit well. I couldn't really find a qualification for it to be. Yeah. Okay.
Got it.
So yeah, this are those buy to sell wicks, which also did have interaction. So we had these buy to sell wicks as demand, which interacted to the left as well. And then if we look here, price taps in, pushes up, and these buy to sell wicks are the last sort of flip before that failed. So we'd be taking the rest of our position off at this supply.
What are your opinions on buy to sell wicks in the 15-minute? Do you feel
15
like they
minute,
hold?
Yeah, 15-minute they'll hold. Not most of the time, but they're a lot more likely to hold in 15-minute. On the 1 minute, as I've mentioned quite a few times, don't really give them too much weight. But yeah, on the 15-minute, they are still showing interaction, right? Because what are we looking for? We're looking for price to come into demand to push up and then for that to fail. And on the 15-minute, if you have buy to sell wicks, on the 1 minute, what does it look like? It looks like this, right? Demand tries to hold and that fails.
Yeah, because just a lot of my testing, they haven't been holding that much, or
even on the 15.
Yeah, and even if I go to target them on target a buy to sell wick on the 15-minute, just pushes straight through anyway.
Yeah. Well, that's where it comes into like not being greedy. And yes, you could have made more, but to make sure that you don't hold through a massive pullback or anything. In this sense here, Liam, what you'll see is, yeah, this was a bit of a longer trade. It tapped and it did hold.
Yeah.
So in this sense here, it was right to be targeting those buy to sell wicks, and that's 12R. So you'd have 25% off at 4R, which was in this big candle here within 40 so minutes, and then 75% being at 12R here at the high of this, sorry, at the low of this supply on the 15-minute. Overall, the trade, I think it was only like an hour 45. Yeah, hour 40. So it's not relatively very long, especially if you are coming from retail support and resistance like Mbelly. So welcome to the call as well, Mbelly. But yeah, it's a lot of the time it is nicer to just be out of the trade within an hour. So anyone have any questions on this one here?
Yeah, can I just ask a quick one?
Of course.
So, say you didn't get involved there.
Yeah.
Would this be a confirmation entry here when you get the break here?
Yeah, you could. So that would be the first level of respect. So yeah, if you had, sorry, let me move it back to where you were. And especially because this also has swept liquidity.
Because, yeah, my doubt with this
Can you zoom in a little?
Can we show you what, sorry?
Can you zoom in a little?
Yeah. Oh, you're on your phone. Yeah.
My doubt with this one is this is all one big push down here.
Yep.
So
except for this.
Yeah, except for this. And then we have this break here and then looking to try and get involved here.
Yep.
Whereas with the trade before that Liam took, that was actually like we had this coming down and then we were actually breaking supply to pull back for the confirmation entry, breaking supply coming back.
Which one that Liam took, sorry?
Just the previous trade that won.
This one here?
Yeah, exactly. So every time price pulled back was after it basically broke a supply and then it pulled back.
But keep in mind it's a 1 minute supply as well, right?
Yep.
So we're not really interested in the fact that it pulled back after breaking the 1 minute supply. Like, yes, that's going to happen. But like you were saying, like, yes, this was sort of like the 1 minute swing high and the 1 minute swing low. But until it interacts here, it's not really much of an issue for us that it broke a supply.
Okay. So you don't mind if it's one great big push down, you can still look for that first level of respect and then
Yeah, of course. Yeah.
get in.
Yeah.
Okay.
It is nicer to flip a whole zone like this when we flip this whole thing, but on the 1 minute, like even those zones don't hold much weight. So we're looking at the 15-minute zone. So yes, here, where are we? Here, this would be the first break. And I know what you're saying, like, shouldn't you wait for this to break, right? Or the one above. But no, as long as we've seen demand being respected. So this here would be, this is a demand, it set a higher high, price came back to this demand, respected it and set another higher high. It just depends how far away you get as well. Like I wouldn't be looking to take a confirmation entry like halfway towards our target. If you're still quite low from where the actual POI we're basing our trade idea off of, then it's a good place to do it. But yeah, if you're getting quite high up in the leg, it's probably not a good idea.
Yeah, perfect.
Cool. Sorry guys, I am going to have to wrap it up there. We've got people coming to the house in 8 minutes. So I will wish you all well. If you have any questions, please do leave them in the Discord and I will get back to them then. I'll end the recording now.